Building Blocks, 2025 in Tel Aviv, the future of tech.
Um, Thank you for joining us. Hope everyone is having a good time today. Um, Happy to have you with us. My name is Yotam, and today we have our panel, how to launch a token without getting wrecked. With me today, I'm joined by Ziv Kainan, markets team at XDG Network, correct? Um, Andres Kleczewski, correct? Uh, Associate at MME Legal, and Roy Levav, co-founder at Efficient Frontier. And what we're gonna talk about today are token launches. So first of all, we're gonna talk a bit about how do you even launch a token? What does it mean? What does it require? Um, and then we're gonna jump into talking a bit about token launches that happened recently. So those of you who've been following different token launches might have noticed that some of them or most of them have not been doing so great. There was the airdrop meta, then there were all sorts of different kinds of structures for tokenomics and distributions, stuff like that, that were not necessarily received in the best way. Without further ado, we will jump into it. We will start by introducing everyone. So if you can all go one by one and introduce yourself. Give a couple of sentences about who you are, what you do, what the company you work for is doing.
Do you hear me? Yeah. Okay. Cool. So my name is Ziv Kainan. Just a little background about myself. Started my career as a lawyer. I did corporate and securities law in several law offices, among them Eitar. And then in 2017, I was the lawyer for many of the early tokenization projects, Securitize, Spice, and so on. Then I did some executive roles at eToro, then Onera, which was a startup that was connecting financial institutions. Eventually, JP Morgan became a big investor in the startup. And I also tried to create a trading platform here that is in Israel that is based on blockchain technology. Today, I'm here representing XDC Network. XDC Network is the 60th largest token in the world. It's a network that is designed for real-world asset applications. It has a partnership with SBI Bank around shipping and bill of lading. It has different application related to payment, account receivable, and so on that is built on it. It has recently we've listed 4 money market funds on XDC. Those includes BlackRock, Fidelity, State Street, and Aberdeen. We intend to use those money market funds as collateral for different projects, including stablecoins. I'm happy to be in this project today, in this panel today. Thank you.
Hello, everyone. There's a small mix-up here. My name is Andres Kleczewski. I'm part of MME in Switzerland, a law firm that's advising a lot of crypto projects. We're also advising under EU law now, so having lots of fun with Mika lately, with another colleague who's also EU qualified lawyer. Mostly focusing on DeFi projects. So I work with all the dreamers, people who want to change the financial system and rely on all the exemptions. They are decentralized. So spending a lot of time explaining that identifying as decentralized has some implications, and you can't just identify as decentralized if you hold all control. So that's the core area, let's say, of expertise for me, and with financial regulations. But obviously, once you're in the crypto space, you end up working on a lot of other things. So you discover also employment law, you have lots of contractual aspects, IP. But yeah, financial regulations are my core thing. Having fun with that.
I'm Roy Levav. I'm co-founder at Efficient Frontier. We're an algo trading company focusing on HFT, which basically means high frequency trading, basically focusing on developing very fast and reliable infrastructures, and on top of that, smart algorithms. We've been doing it for the last 7 years. We actually started the company in 2006 in traditional markets. 2017, we basically took the knowledge and the expertise and the the guys at the company and converted it to crypto. Today, we are accounting for around 0.5% of the entire trading volume in the market. So that's about anywhere between 10 to $20 billion on a monthly basis. In terms of trading volume, we've worked with over 250 projects by now, helping launch, support, and grow their markets. And yeah, that's where we are.
Cool. Thank you all. So I want to start. I want us to start with a bit about the process of how companies launch their tokens, and I'm gonna address and Grace first. From your perspective, from the legal side, so I've worked with some protocols that were contemplating launching a token, and most of what I remember, and I'm a software guy, okay, but most of what I remember from these processes is talking with legal, making sure that every one of the decisions that we make, as you mentioned before, it doesn't affect our perceived decentralization. How do we launch it in a way that where and maybe we will also get into how regulations or policies are about to change, but up till now at least, most of the policies, especially in Europe and in the US, were very restrictive. Or at least perceived restrictively or perceived as restrictive. So from your point of view, what is the process that these companies go through? Like when they, first of all, when do they first reach out to you? And then what is the process that you go through together before the launch and through the launch and all of that? And Ziva will maybe want to get your opinion on that or your perspective on that from the other side later on.
I think you have a great perspective on more like the traditional aspects of tokenizing financial instruments and this kind of things based on the discussions we had before.
We were arguing before.
Yes, because we don't advise the same kind of
Good,
project.
you were warming up for the panel.
So when you talk to projects like most people with your background potential, like most of the software developers dreaming about decentralized protocols, they will mostly aim at something that they want to be a utility token. So the process is different than if you have something that from the beginning you know will be a regulated security, although it's tokenized. Here, the process depends on whether it's a last minute thing and they just show up with a lawyer. Hey, by the way, we want to list soon, or we're about to have a private round. Can you please just quickly put together a SAFT or a warrant for us? That's the kind of requests we have often. Or if it's a project that we advise from the beginning, it's going to be part of like the initial structuring where we define a strategy. And then you have a lot of questions being, where do you want to offer this token? What will be the main jurisdictions? Now, you have US that are a major pain in terms of like, do you want to offer there or not? If not, that's great. That's why you have all these exclusions for US currently that potentially will change when we have a clearer framework. And then now the EU as well, which either is excluded or people want to rely on exemptions as well, or they need to publish a white paper, and we'll have like this whole process of like 20 days between the moment you publish the white paper and so on. So there's increasingly a number of jurisdictions where you have some protections for tokens. So public launches need to be really well organized, and you can't just show up 5 days in advance and say, hey, can we have some terms or something for the public launch? This doesn't work because then you just need to start counting, for example, for the EU, the 20 days. And the poor lawyer realizes that they need to not sleep for 2 days because they need a white paper in the next 48 hours. So the process is really depends on the type of token and then on how was it planned in advance. If it was well planned in advance, the first step is also tackling the private sale. So this is something that often is just bootstrapped, and it was mentioned on other panels how you have lots of templates available online. You can just like ask ChatGPT if you want to. Like I've sometimes had feedback from clients, oh, sorry, we just asked ChatGPT, it was faster and cheaper. Well, that's not always a good idea because there are some peculiarities depending on who is like the private investor and this kind of things. Meaning, ideally, they should reach out to us from the beginning just to say, hey, this is our plan, or on the contrary, we have no plan. And then we can like create a timeline for them with like some caveats that they need to take into account. That would be the good process. But then in practice, it's more sometimes adjusting to what was already done, which ultimately costs more because if you already signed some agreements in the past based from like one entity that's not supposed to be the entity that's issuing, and then you need to assign them, but then you realize that someone else was promised token for even a different entity. Like we just need to actually figure it out. It feels like diving into a pool and just trying to navigate what was done and cleaning it all up. So reach out for a lawyer from the beginning. It can be just 1 hour, have a chat, just tell them what is the plan, what are the possibilities, and they'll like provide you some bullet points input. And it doesn't cost that much to start with that.
And so how long would you say that process is, just like for founders that are now like thinking like about maybe launching a token, how much time in advance should they contact you, like half a year before they plan to launch, or
I would say half a year is a long time, because if you don't even know what will the token will do, I mean, maybe it's a good thing, because then you can also say at what point you want to sell it. Will it be close to the launch when the functionality is already available? Because that's also like one of the caveats. Will your token be functional or not? Depending on whether it is or not, the approach is very different, be it in terms of like how we draft agreements and the rules applicable to the issuance to the
Yeah.
public.
okay.
So maybe a month, let's say a month in advance,
Okay.
so that before the private sale, so that the lawyers can like kind of wrap their heads around it. 6 months is really just notifying, hey, we may
Yeah.
have a token coming at some point.
Yeah.
I think we should know that there's the change that happens in this space since, let's call it like the Banco days. Okay. So Banco, for example, they raised from the public. There was a large amount. It was like a no KYC public offering, and the space changed a lot from that time. Today, it's mostly private offering. So you sell under SAFT, you KYC the person that invests in those tokens, and there's like a listing process that is going in the background. So it's a little bit more safe than just offering through a KYC, and then like you have securities regulation and AML, questions and so on. And the SAF document, or the documents that you sign is, pretty straightforward. And so I think that the offering process has become a little bit more simple, and has become a little bit more streamlined. And the only thing that I would say, when you're working with international lawyers, like MME, like U.S. lawyers, could be a U.S. lawyers, or Dubai lawyers. I would take a local lawyer, or someone that understands regulation, that coordinate those different offerings or different lawyers. It sounds like a little bit more expensive, but it's actually not. It's like it not everybody can have these discussions around, what are we looking for, what are the regulation, what do we need to comply with, and so on. And I think this is, my lesson into it. When I was with eToro, I was lent to a project in the good dollar. We were issuing a coin that was distributed as an airdrop, as a basically for no reward back under non-for-profit. I did this examination. I went to Switzerland. I went to the UK. I went to Dubai. I went through all those jurisdictions to verify that I can launch this project. Eventually, I launched it out of the UK with a legal opinion from the biggest law firm in the world that was protecting all the executive that was part of this project. Of course, some executive from eToro, and that work that I did, I think it helped the project, protected the executive that took part in the project, and found a suitable place to launch the token from. So I think this is my advice to the people that are considering launching a project.
Yeah. Okay. Thank you. Well, I want to jump into what you guys do at Efficient Frontier, and I want to say you're one of the largest market makers in the world, definitely the largest one in Israel, here in Israel. And I would like to ask you, so you come in contact with the teams at a bit of a later stage, right? And I think that a lot of us, or a lot of people in the industry, are kind of, I would say, somewhat afraid of market makers. I'm not sure who here is following what's going on with Hyperliquid right now, and Movement Labs, and maybe if we will have time, maybe we will talk about that a bit as well. But can you demystify for us, what do you guys do? Why do companies need to talk to you? What do you offer them, from your
Yeah,
perspective?
for sure. I mean, I can talk about it for like a whole day. And you should be
I will
afraid
stop you at
of
some
market
point.
makers. You have a good reason to afraid of them. Yeah, I think, and just kind of reiterate on what the guys just mentioned. I think professionalism is really missing in this industry. Launching or listing an IPO, just a normal IPO, it's a long process. It involves many different steps, stages, road shows, and so on. To think that all of this can be squeezed into some kind of a couple of calls with lawyers and market makers and exchanges, and let's just figure it out like this. this is just this is just embarrassing in many ways. So I think the first thing that I would say, be professional. You don't understand markets, or you don't understand law, or you don't understand regulations, you wouldn't understand it. It's not about having a call with these guys. You can talk to them for like a week. You don't. I won't get it. And I've been around for like 8 years. So yeah, and the same thing goes for market making. Many times we are talking to projects, and it's just they don't understand what we're talking about. It's like, yeah, the market makers, we need liquidity. The exchange told us to talk to you. Let's do it. Then just okay. So we're trying to explain it. I mean, in general, it's not that complicated, but finance make things all of them complicated for a reason. But
Yeah,
in
it's
general, our goal is really to build a market. I give you a metaphor. If you're a company and you're a private company, you have 100 holders of the share, with founders, investors, and employees, and you want to launch it or list it as a public company, and you have now 10,000 people on the market that wants to buy that. So what happens if the first seller that holds the token out of this 100 wants to sell it for $1, and the first one that wants that willing to pay as much is willing to only pay 50 cents. In this case, there's no market, right? And this is obviously an extreme and theoretical case, but just to kind of explain that. So the market maker will come and say, okay, got it. I'm willing to buy. Sorry, I'm willing to buy it for 80 cents and sell it for 80 cents and a quarter. And I'm putting $2 million on each side. What happens usually is the dynamic of the market is kind of forming around that prices, and that's really it. We are supposed to be providing the market, and make sure that people wants to sell or buy the asset can do it anytime at any amount for a fair price. That's really about it. Now it is getting complicated behind the scenes, and there's a lot of risk here, obviously, and we are trading hundreds of thousands of trades per day and many exchanges, and there's a lot of different nuances here. But generally, that's the case. And what we often see is that not just we were talking about how to not get wrecked. One of the first things that you need to do in order to not get wrecked is understand the deal with the market maker, because many times we are seeing that deals are getting signed with projects, and they just say, hey, this guy has gave me just a better deal. And when we look at the deal, it just doesn't make sense. So something else is happening. And we know, unfortunately, what's happening. But the deal, as you signed it, you don't understand it. You don't understand what you're going to get. You don't understand how much it costs. You don't understand none of the nuances here. And many times we've seen that the deal with the market makers, unfortunately, screwed the project.
Can I
So-
add also? Sorry. When people launch a token, they usually speak about which exchange it's going to be. It's going to be on Coinbase. It's going to be on Binance. It's going to be on Bybit. Market maker is more important. It's more important than which exchange are you going to be listed. At XTC, we are working with Wintermute, with GSR that Alan was supposed to be here, with B2C2, and with Cumberland DRW. And what?
We're missing one.
We're missing one, yeah. Well, we're working with 4 market makers. When we started, my team is the markets team. So we take care of the listings, and they work with the market makers. And my partner is a former Goldman Sachs and Deutsche Bank, and come from the TradeFi industry. Is Scottish, and myself with a legal background. Basically, what we've done, we opened all the market makers agreement when we started, and start negotiating and bringing the right incentives to build an efficient market for the tokens. The token started at, I think we were 160, and we're now number 60, tripled in size, together with a partnership that we've done that was important partnership, an asset that we listed on XDC. We brought real value to the chain, and we brought efficiency with trading. So market maker, it sounds like boring. They just put liquidity and the top of the book, at the bottom of the book. Who needs it, and why do you give them an option? And where do you position the option? What the strike price? Those are things, as you said before, that I want to iterate. You need a professional to be able to interact with them, to have the right strike price and the right incentive place for them to do their work efficiently. And then when they do their work, they can open you so many doors to exchanges, to where do you want to list, if it's Binance or Coinbase or eToro or whatever, like they can open those doors. So that's the role of the market maker.
Yeah, maybe on a related note, because I mean, it was mentioned you need to be professional and understand the deal. And if it's the lawyer who's reviewing the agreement that points out that some of the economic aspects of the deal are missing, maybe something was done wrong. Because when we end up reviewing some of these agreements and we're like, oh, but as you mentioned, so what are the prices? Like, what was the deal exactly? And they answer, oh, we haven't discussed that. Probably you should have been at an earlier stage at that point, not already about to sign with the lawyer reviewing the agreement. And it's the same for tokens. This is also the easiest way to get Rekt when you issue them and you have private sales, because agreements are pretty straightforward. But in some cases, it's so straightforward that basic aspects are left aside and people don't actually agree on what is done there. First of all, do you even guarantee issuing a token or not? In some cases, you know that the public issuance is already planned, so you can say by that time you'll get those tokens. But in some cases, it's so early, you don't even know what you will issue, when, from where. And in this case, it has to be clear, because sometimes we come back with like, so everything was negotiated by the investment team, and then we come up with this agreement. And I see comments such as, oh, but you should guarantee the issuance. But we don't even know whether there'll be a token. And it wasn't clear, for example, 100% for people who were supposedly negotiating it before. So just making sure that the economic terms, like even for term sheets, sometimes the term sheet is so confusing. Like we get it, it's like, but what exactly have you agreed on? So yeah, understanding it. And although they're not experts, it's not just about the legal aspect. It's like, what are you doing? And if you're not able to explain the deal to your lawyer, or if you're missing some points, probably you should be at an earlier stage in your process.
Yeah. So I wanna like double click on these deals that you all are referring to, and I wanna take like one example. Maybe it's not a market maker deal, but an investment deal, an interesting one that I think got some backlash through the community, which is Celestia, who basically made a deal. For those who don't know, their investors, they got tokens. The tokens are unvested, but the investors are allowed to stake these tokens and get staking rewards, which obviously everyone claimed they immediately dumped and they're selling, and that's why the price of TIA is so low, etc., etc. So, Anne-Grace, I would like to understand from your perspective, like, what is the legal framework for such a deal? Because, like, if you look at trade tech, like, there's no way anyone would do something like that, right? Like, investors are locked in, they have liquidation preferences. Like, it's very, it's structured very differently. So from your perspective, like how does that work, and why do teams choose to do that, and should they choose to do that?
I mean, there are two aspects. The how it's structured, to start with, you have a blank page, you can do whatever you want to. Problems start once you have agreed on something and you need to make sure that anything that you do subsequently doesn't contradict what you agreed on initially and what you may have also disclosed to the public. The other aspect is, you compare to like traditional finance, you have all the rules relating to like maintaining healthy markets in terms of like insider trading, market manipulation, and this kind of things. So that's another aspect that doesn't really exist everywhere yet for crypto. So now in the EU, it's transposed to also crypto assets. But for example, in Switzerland, it's not. So you have much more freedom there, because there are some things that maybe you would not be allowed to do under a traditional setup, but you could do on paper, although it's not potentially fair with crypto. Now, what you communicate to the audience. So like, just to go back to the Celestia case, depending on, have you published some tokenomics that other people have relied on? Have you advertised specific things? Have you already described, for example, the staking process without mentioning, or with mentioning things that are contradictory? So the backlash often comes from either there was nothing communicated and all of a sudden people discover something that was pretty important, or from the fact that something was communicated and now you do something that contradicts what was said before. So from a legal perspective, it's more a question of, is it deceiving like someone? Is it simply like an issue of what was advertised and the information communicated? But to start with, you can do whatever you want. And the only other aspect would be, if you are a decentralized project and you have investors having 70% of all the token supply, for example, you might have some issues there. Like in the US, for example, decentralized networks are defined in a specific, well, will be defined in a specific way. It's Financial Innovation 21 or something like this. It's like an abbreviation for the bill, where they refer to thresholds. No single person is supposed to hold more than 20% of the token supply. Well, in some cases, when you look at what's happening, it may be more than 20%. And then it's also like this idea of all your investors together could simply block decisions. So you may not have a person, but you have a group of people who de facto control the whole project, meaning it's not actually decentralized and it just works the same way as if you had shareholders.
Cool.
Just so that for an industry that is so proud of being transparent and decentralized, these deals is just the exact opposite. Like transparency, you don't need a lot of these
Yeah.
nuances if you'll just be transparent about this. And we've been pitching this for a while. Let's just open the deals. Let your community
Yeah.
judge that, and see who's holding what, who's getting what. But
Yeah.
it's
I
still
think
there.
I think that's a very good point, and it relates to a question that I wanted to ask you. So recently there was the Bera chain launch. If any of you have been following it by chance, it crashed something like 65% on day one. And one of the interesting things, and I'll connect it to what you just said, like the transparency. One of the interesting things that people noticed on day one is that there were huge shorts opened on the day of launch on Hyperliquid. Now, what's interesting here is that Hyperliquid is its own perp chain, so everything is transparent, so people could see that. And obviously, people start coming up with all sorts of explanations for what's going on here. And one of the popular explanations that I saw pop up, and that's what I want you to comment on if you have any opinion on that, is that people suggested that these shorts were opened by market makers who were hedging their positions of unvested, or not unvested, sorry, of locked tokens. And I think that, again, that's part of what makes market makers get that reputation of being maybe sometimes shadowy or stuff like that. And I wanted to know what's your opinion on these incidents, let's say like that, and if you've watched the Bera chain launch by chance, if you have any.
I didn't watch it personally, but there's still a prophecy that makes its way into existence. But yeah, it doesn't relate to actually market makers. It can be any traders or investor or anyone that holds a significant amount of tokens that knows it's not going to be dumped. Now that's, in many cases, that's just, the audience doesn't know about it. So it's actually good, that they could see that that's what's happening, so they won't buy the token and get wrecked on the first day. But if the market making deals, and every other deal, by the way, if the marketing team got it, if the lawyers got tokens, if whatever, the audience will know it, and they will know at what price they got it. So if they're profitable, they're not profitable. If you gave, if your token rank is so messed up that you gave somebody tokens, a significant amount, unlocked at a $20 million valuation, and you're launching at 200, what do you think is going to get to happen? It's just going to be dumped. So yeah.
Is it even legal
Yeah.
for market makers to engage with
It should be an independent.
Should be
It should be an
independent,
independent body that is not trading against the token. They do have interest, but it's important to monitor them. So, for example, we having daily reports. We know exactly when the market maker is drawing liquidity for the market. Where when we feel like this, it could be aggressive, but they're not. They're supposed. Yeah, the market maker does not support to be an active player within the market, and it's supposed to be independent. They do have a loan and an option most of the time, and but that they're not actively paying. Sometimes they're hedging their position, but they're not they're not like shorting. This is something that I never encountered before. I have no
Just
idea.
add to that, let's distinguish between market makers. There's generally speaking two types of market makers. Designated, which what we're talking about here, that they are engaged with the project, have a deal with them, provide value, provide KPIs, has to be in the market 95% of the time, close the spread, all that kind of stuff. And then there are what we call voluntary market makers, which basically use market making as a trading strategy. They can be in the market 2% of the time, with whatever amount of money they want to that is spread, just to make money on the spread. So when you're saying market makers, you are actually referring to a very wide spectrum of players, because market making is a strategy. Everybody, not everybody, but basically I could generally say that hedge fund, every hedge fund, has a market maker strategy. It doesn't mean that it engaged with the project and got a deal with them. It just means that they took $100,000 or $1 million, bought the tokens, and started trading it as a market maker. But does that make sense? Okay, so when you're saying market makers did that, it doesn't necessarily means that the market makers that signed with the project did that. It could be 100 other market makers that are not related to them.
Yeah, this is 10 hours. It's our time, but I will still steal 2 more minutes of your time if okay, to ask a couple of questions coming from the audience, and then we will finish with that. So I will first I'll ask one question that came up here, and then I'll ask one that came up a lot. So I will address these questions to all of you. So if any of you have any specific opinion on that. So I think the first question here that seems interesting to me is someone's asking, is it a mistake to first launch on a decentralized exchange without having a deal with the market maker on centralized exchanges, or could that be a good strategy sometimes? What are your opinions on that?
Right. Yeah. To me?
I think you're the best person to answer that.
Yeah,
I'll have a
well,
follow-up.
I mean, like everything in life, it depends. But yeah, with the snipers, front runners, and all this kind of different stuff now, it's a wild west on the decentralized exchanges. So if you are worried about this, I would suggest that you rethink that because that could significantly impact the user experience, the price fluctuation. You know, we're in a volatile market. It's moving 20% without, specifically for this token. So centralized exchanges are much more controlled. You know, it's harder to manipulate the market. I mean, in general, these are trading strategies, right? Whether it's a sniper on the centralized exchange or an algo trader on centralized exchanges, but it's much more controllable, right? So. Yeah, I think that's a concern. It doesn't mean necessarily that it's better, but yeah.
It depends. It's a very lawyer-style response. But just to jump on that, because we talked a lot about market makers and transparency, and I think it's kind of related, is that surprisingly now we say that there's more transparency in the EU with the white paper requirement, but we don't refer to tokenomics and market makers in it. Meaning in terms of like prices, and I mean, at least it's not specified that you should specifically include this information, which means that people don't include it if you look at the examples, which is funny because this is part of like the key information. Just know, is there a market maker that was planned by the issuer, and how will that work out? And like, what are the tokenomics? Like, it's not even referred to specifically how is the token supply dispatched between the different actors. So yeah.
Thank you. Okay, so I'll ask you all one last question. It's a question coming from the audience several times. If you could each of you share one mistake you've seen teams make that you would recommend people avoid, maybe something that you see repeatedly, or maybe a huge mistake that you saw someone make. Yeah, go ahead.
There's an organization out there called Launchpads. Be careful. That's what I have to say.
So don't use launchpads.
Yeah, just I don't want to be, maybe
you didn't launch.
Maybe I just didn't met them yet. This could be, but be careful. The people that they bring and the value that they bring, and whether you mentioned Berachain. I don't know if there's someone there that was promising them something that they couldn't deliver. Sometimes it seems like a miracle, because they're coming and they say, "Oh, we get you money," but be careful, That's all.
So we should not launch on Pump Fun. That's the. And Grace?
It depends on the launchpad. There's like a lot of them out there, so there are some better and worse. Yeah, we've seen a lot of stuff with the issuances. So don't announce things in public before it was first double-checked with your lawyer, because this is where we have issues. It's like, oh, you already announced that. Well, damn, now we need to work around that. And like, especially now with the EU, but it's the same in the US and everywhere. Like if you announce, for example, the major problem now is you announce a listing before it's even confirmed, and then you still have the issuance first. And well, you could have relied on exemptions in the EU if you had not announced your listing first. And this is this kind of things, just like, don't talk about it before it's confirmed and before you have a strategy.
So the intern on Twitter should talk to you before they tweet.
we have no, like, will we say have some guidelines and like have a process in place, like instead of having just someone who, like a community manager that posts whatever, because this can really backfire, not even for tokens, but in general, like about the product. Someone is just posting a tweet. Yeah, well, that tweet could have consequences.
Thanks.
And I'll just mention what I mentioned before. Be professional, understand the deals that you're signing, and if you don't understand the deals, just don't sign it. Get somebody from your investors or a friend or whoever you trust to tell you what the deal is, because this is like, yeah, it's a joke in many cases.
Okay, thank you. Is there anything you would like to add before we wrap it up here? Okay. Thank you so much. Thank you so much, everyone.
Building Blocks 2025 in Tel Aviv.